Is it possible for you to live, work, and invest in a high-tax country, build your fortune of hundreds of millions or even billions of dollars, and then legally take that fortune offshore, renounce your citizenship, and invest the money into perhaps an offshore trust held in a tax haven so that the money can grow tax-free into perpetuity? In the majority of cases, the answer to that is certainly no. But today I want to share with you why I think that in at least the case of one very special businessman and investor, the answer to that is possibly yes. And it's a remarkable story. My name is Joshua Sheats, founder of Radical Personal Finance, here today for Nomad Capitalist, where Andrew Henderson and his team help 7- and 8-figure entrepreneurs legally go where you're treated best. More information at nomadcapitalist.com. The businessman and investor in question is none other than Peter Thiel. And Peter Thiel is someone who's of interest to us in the internationalization community because in the past he has built a fairly impressive Plan B. He was in the news a little over a decade ago because of his New Zealand citizenship, which he acquired with only a few days being physically present inside the nation of New Zealand. And that was something of a scandal at the time. But it tells us a little bit about his international orientation. Now, mostly, I want to focus today on his alleged $5 billion Roth IRA and how he could potentially intelligently use that Roth IRA as part of his offshore tax plan. Now, this information comes to us courtesy of the journalists at ProPublica. These journalists are in the process of publishing a quite extensive series of stories lamenting the overall low rates of tax that some wealthy businessmen and investors are paying in the United States. They have evidently gotten their hands on a massive data leak, including the personal tax return information of at least several hundred of the wealthiest Americans, and going back a significant number of years, in some cases perhaps decades. This is quite a scandalous data breach. It's some of the most confidential information that is imaginable, but they've evidently, allegedly, been able to get their hands on it. And so they're publishing a series of stories lamenting how these men and women are living in the United States and not paying their fair share. Now, this is of interest to us as tax planners because there are many people who want to live in a otherwise high-tax country like the United States, but pay a relatively moderate tax rate. And this data, if true, demonstrates to us some of the techniques that the wealthiest Americans are using to moderate their tax bills. But recently, they published the story of Peter Thiel and his alleged $5 billion Roth IRA. Let me share with you the story first, and then we'll talk about how potentially Thiel could take his $5 billion tax-free, go offshore and never pay a penny of tax on it, and follow every law in the process. Now, Thiel was, of course, one of the early-stage employees and founders at PayPal. He worked at PayPal in the early days, and at the time, he had the wise sense to open a Roth IRA and contribute some of his early-stage shares that he bought of PayPal into that Roth IRA. At the time, he was earning below the wage threshold for Roth IRA contributions, and thus he was legally permitted to make a contribution to the Roth IRA. Evidently, he made an initial contribution of $1,700, and he purchased 1.7 million shares of PayPal stock. That's a stock valuation of 1/10 of a penny per share. Now, the ProPublica article does not prove any wrongdoing on Thiel's behalf. He followed the law in doing it. What they allege, or perhaps if allege is too strong, they intimate, they hint at, is that Thiel took a too low of a valuation on those initial shares of PayPal. Now, we don't know what the actual facts of the case were. That's not our place. That is a place for any relevant regulators, the IRS. That's a matter between him and them. Early stage startup share valuation is famously difficult to calculate for many, many reasons. So evidently, he valued those shares at 1/10 of a penny per share. We don't know if that was the right valuation or not. But what it did allow him to do was to get 1.7 million shares of PayPal stock into his Roth IRA when he was still eligible to make contributions to the Roth IRA. Well, PayPal went on to become a massive success story in the world of business. PayPal was bought by eBay, which resulted in a lovely cash infusion into Thiel's Roth. Thiel went on to use the money to invest in a number of other companies and ventures, famously his own company, Palantir, as well as early stage investments in success stories such as Facebook. And over the last 2 decades, Thiel has evidently grown the value of that Roth through shrewd investing to be a value of $5 billion. Now, Thiel, if he continues to hold the Roth to the point where he can make a qualified distribution of that money, can simply start spending the money tax-free. Let's talk for a moment about Roth taxation. Remember that in a Roth IRA, you have 2 components. You have what's called your contributions or your basis. That's the money that you've put into the account. And any person with a Roth IRA can, at any time, withdraw those contributions from the account without any tax consequences whatsoever. However, the gain in the account is going to be taxed if you take it out and it's not characterized as a qualified distribution. What is a qualified distribution? There are a few rules, but the 2 most important ones are called the 5-year rule and the 59.5 rule. So the 5-year rule indicates that you need to put the money into the Roth IRA, leave it there for at least 5 years before you can withdraw it. At 59.5, you can take the money out tax-free as long as it's been in there for 5 years. Thiel is not yet 59.5. He has in the past taken some distributions from this Roth IRA. When he took those distributions previously, he paid taxes on the gains and he paid a penalty, a 10% penalty for taking those distributions from the Roth IRA. Thiel is currently 53, about 53 years old, which means that if he waits about another 6 years, he'll be able to withdraw all of his money from the Roth IRA and spend it income tax-free while living in the United States. So this demonstrates first and foremost that using this particular tool, he's been able to show how he could live and work in a high tax country like the United States, in fact, even in a high tax state like the state of California, and do so in a tax efficient manner. And if he wants to spend the money, it's his to spend. If he doesn't want to spend the money, he can continue to accumulate the money in his Roth IRA until he dies, at which point it would pass to a beneficiary. When it passes to a beneficiary, it will be subject to estate taxes in Thiel's estate, and it will also be subject to income taxes for the beneficiary, subject to those relevant rules. Now, what would happen if Thiel were to go international? We don't know if Thiel wants to go international. He seems to like living in California in the United States, but we do know that he has the option to go international. He's put in place his Plan B, his citizenship Plan B at the very least. Thiel was born in Germany to German parents. He grew up and spent a few years living in South Africa, later moved to the United States and became a naturalized U.S. citizen. One of his parents naturalized, the other, at least according to his Wikipedia article, did not. And so we don't know whether Thiel retains his German citizenship. I don't see personally any reason why he wouldn't still have it, but I'm not privy to all of the details of those discussions with the German government and his own situation. But we don't know if he retains his German citizenship. We do know, at least according to news records, that he's currently a New Zealand citizen as well. In 2007, he became a New Zealand citizen without even spending very much time there. So he has at least one other citizenship, and for all we know, perhaps he has another half dozen from all around the world. Because we know he has at least one other citizenship, we know that he has the option, if he wanted to renounce his U.S. citizenship without becoming stateless. Now, how could this impact his tax planning? Let's discuss relevant exit taxes. Thiel would certainly be considered what's called a covered expatriate if he were to renounce his U.S. citizenship. Remember, there's a three-pronged test as to whether or not an American taxpayer is a covered expatriate. The first prong of that test is, has this taxpayer paid in excess of $172,000 on average in federal income taxes for the last 5 years? If he or she has, then automatically he or she is a covered expatriate. The second test is the net worth of this American taxpayer in excess of $2 million? If the net worth of this American taxpayer is in excess of $2 million, then automatically the taxpayer is a covered expatriate. And the third test is, can this taxpayer certify tax compliance for at least the last 5 years? If the taxpayer cannot certify compliance, then automatically he or she becomes a covered expatriate. We know that Thiel's net worth is in excess of $2 million, so he is a covered expatriate. Which means if he were to renounce his U.S. citizenship, then he would have to go through an exit tax calculation and pay the exit taxes in order to be relieved of his tax obligations to the U.S. government. We don't know all of the assets that Thiel holds. Generally, all of the assets that he holds personally would be marked to the market, and then he would owe whatever embedded capital gains taxes there are in those asset calculations. But what happens to an IRA or Roth IRA when a taxpayer renounces his citizenship? Basically, the IRS deems that on the day before the renunciation, the taxpayer has taken a full distribution from the retirement account. What that means is if there's $1 million in the retirement account, then the IRS calculates that that person has received a full $1 million distribution personally. Now, thankfully, they will allow you to not pay the penalty tax on a distribution. So if Thiel were to renounce his U.S. citizenship today, and if he does have $5 billion in his Roth IRA, he would not owe 10% of that in a penalty tax because he took it out before the age of 59 and a half. But what he would owe is tax on all of the gain that's there in that Roth IRA. He would be able to receive his first $1,700 back, tax-free, and then he would be taxed on the $5 billion as imputed income to him, which would be a very heavy tax bill. But what if he waits until he's age 59 and a half, another 6 years? Well, as I understand the tax code, at that point in time, he would be deemed to have received a $5 billion distribution from his Roth IRA, but that $5 billion would be considered a qualified distribution. And because qualified distributions from Roth IRAs are not taxable, he would have a $5 billion asset base completely tax-free. That would be remarkable, right? It would be considered for tax purposes if he had received $5 billion and it's sitting in his checking account, and there's no tax due on it. So what if Thiel did, in fact, renounce his citizenship at age 59 and a half and take his $5 billion elsewhere? Well, if he's no longer an American citizen, then he no longer has all of the embedded tax liabilities on his wealth. And wherever he did become a tax resident, he would be coming in with $5 billion of capital. He could go to a tax haven, right? Dubai, Monaco, St. Kitts, virtually anywhere, especially a place that's considered to be a tax haven. He could establish his tax residency there, and he could start with $5 billion in assets. He could additionally take the money and go and deposit it into something like a trust for the beneficiary of himself, for the benefit of himself, his family members, any causes he wants to endow, etc. And because at that point in time he would no longer be an American taxpayer, that trust itself could grow sitting in a tax haven with no taxes due. Remember that Americans, if Americans have any controlling interest in a trust, or if a trust has a a trustee who is an American, then that trust becomes taxable under U.S. American trust tax rates, which are quite abusive. But if the trust has a trustee and ownership interests that are not controlled by Americans, then that trust can grow without any taxation by the U.S. government. Now, if it has U.S. American beneficiaries, of course, when those beneficiaries receive income, they'll be taxed on that income by the U.S. government. But if Peter Thiel were no longer a U.S. citizen, he could take and have that money sitting in a tax haven somewhere in a trust, invested for whatever he wants to invest it for, and he could spend the money himself if he wanted to spend it himself. As I see it, this is a remarkable, remarkable planning opportunity for somebody like him. Is he likely to do it? I don't know, right? I don't know him. I don't know whether he would actually do that or not. If he did, it would be quite the scandal. It would be quite the uproar in the United States. And I don't know if he personally wants to fight through that particular scandal. But it's an option that could potentially be available to him if he ever wanted to be free of the U.S. American tax system. I want to point out to you two further points. Point number one. Would Thiel be protected if indeed somebody wanted to come after him personally? Well, I think here Thiel shows some relatively shrewd planning in the other details of his affairs. First of all, he chose, as part of his citizenship plan B, to become a citizen of New Zealand. And New Zealand, while not generally known as a low-tax country, has the unique benefit of not having a capital gains tax. And so if Thiel did do something like this and he became a New Zealand tax resident, he could still be very lightly taxed on the gains of his portfolio. I'm not familiar with New Zealand estate taxes, but at least with capital gains taxes, he could be protected there. The other part of shrewd planning that we see in Thiel's overall structure is the fact that he has a self-directed Roth IRA. He controls all of the assets inside of the Roth IRA. And this is entirely legal for any person investing in a Roth IRA. There are only a few prohibited investments that you can't put inside of a Roth IRA, notably things like life insurance policies, collectibles, real estate for personal use. There are only a few of these restrictions. Beyond that, though, you can put companies, you can put early stage startups, there's all kinds of things that you could put inside the Roth IRA. But what Thiel has done is basically used the Roth IRA as his own personal mini hedge fund of sorts. And so he or his agents control all of the assets. And so what I like to think is I like to imagine, what if Thiel did decide he wanted to renounce his citizenship? And what if Andrew's favorite senator, Senator Elizabeth Warren, gets upset about that? And she and her compatriots in the Congress decide, we're going to get together and we're going to write and pass a bill known as the Peter Thiel Antagonization Act, right? It's a bill specifically targeted to Peter Thiel, to come after him and take his money. Well, I think here Thiel has some protection that even if the laws changed in the future, because he already put his citizenship insurance in place, and because he already owns and controls the assets through his Roth IRA, but he probably has ownership of those and control of those outside of the United States, then if the US government tried to change the laws after he had started pressing forward, I think he has a very good legal argument to say, I'm not going to get involved with you. And practically speaking, he controls the assets. And so if he petitioned the New Zealand government and said, protect me and protect my assets, I think he's got a pretty good case there. And the United States may not be able to get its hands on as much of his money as he wants. Not arguing that he should break any laws. What I am saying is that if the laws were to change, because of the way that he structured his assets, he's actually protected to a much larger degree than many people might recognize. The final point I want to comment on is this. Is this a good strategy for other people to pursue? Should you put money into a Roth IRA as an American, put companies into a Roth IRA as an American, in hopes that in the future you could do what I've just described, my understanding of the laws being that Thiel could do? Well, certainly my answer is no, you should not. I do not think this is a good plan. First of all, I think that the laws regarding Roth IRAs are very likely to change. And I think that Thiel is going to be used as the poster child as to why they should change. You see that with this series of articles by ProPublica. You see already people appealing and saying, why should a billionaire be allowed to have a $5 billion Roth IRA tax-free? We should get some of our hands on that money. And so I don't think that 20 years from now, I don't think that 20 years from now, the rules on Roth IRAs will be the same as they are today. Time will tell whether we're right or we're not right. In addition, I think it's quite risky for you to plan to keep these assets until 59 and a half, especially if you're younger. Remember, this worked for Thiel potentially would work for Thiel because the values are so big and because he's 53 years old. But imagine that Thiel was 33 years old and he had $5 billion subject to these kinds of rules. Well, now a Roth IRA or a traditional IRA is a very unfavorable asset class for him to own if he were going to pursue something like renunciation. This really only works because of his age and because of the fact that this is close enough that potentially he could plan in that direction. So I would strongly advise you, if you're planning to renounce U.S. citizenship, don't use a Roth IRA or an IRA as a primary plan. They're not great assets for renunciation. They are definitely not. What I would advise you to do is to learn from Thiel. If you're going to live in a high-tax country like the United States, which many people are, then do what Thiel did. First, use the tools that are available to you as effectively as you know how in order to legally avoid the taxes that you can while living in the place that you are. Legally, Peter Thiel is living in California, in the United States of America, and he's used this particular tool of a Roth IRA to avoid billions in taxes, quite literally. It's phenomenal. Number two, though, put in place the plan B that Thiel has put in place. Put in place your own plan B so that if at some point in time you wanted to renounce your citizenship, you wanted to legally escape the tax net, put that in place. And then finally, number three, focus all of your attention on the best returning investments that you have. This story is remarkable because Thiel has performed a feat of financial alchemy in growing the Roth IRA so substantially. If you've grown a $50,000 investment in a Roth IRA into $100,000 investment, we wouldn't be talking about it. It's the $1,700 into $5 billion that is remarkable. And at the end of the day, even if you do wind up paying the taxes, if you can perform that financial alchemy, then you will be in a pretty good situation. I'd love to hear your comments and your feedback on this particular set of commentary. Put those in the comments down below. First of all, do you think I'm right? As far as I can understand with the rules, I believe that what I've described to you is in line with all of the relevant regulation and legislation. Notice I'm not commenting on Thiel's other assets. We have no idea. I'm just talking about his Roth IRA and potential renunciation of citizenship. So I believe that I'm right about this, but if you think I'm wrong, go ahead and put that in the comments below. In addition, if you have other questions or comments about this video, please go ahead and put those in the comments down below, and I would love to see your questions, interact with you in the comments, and I'll be back with you in another video.
So people ask, Andrew, how do I get the most out of Nomad Capitalist? How do I begin my Nomad Capitalist journey? The first thing people do is they start right where you're at. They watch YouTube, they listen to podcasts, they read articles at nomadcapitalist.com. We've spent years creating thousands of pieces of free content so that you can get the vibe from someone who's actually done this, from someone who's actually been in your shoes. What they'll do next, they'll get a copy of the book. You can find it on Amazon. It costs a few bucks, and while it's not going to give you all the secrets, it's going to, again, give you more of the vibe. You're going to learn a lot of the things that I've learned. You're going to learn some strategies you can employ, and you're going to get a lot further in your journey. From there, if you are the 7 or 8 figure entrepreneur investor, you can go to nomadcapitalist.com. You can click Become a Client. We're pretty busy these days, but we have availability to help a limited number of people who want to create a holistic plan, something that I think is so important. So if you want to do that, go to nomadcapitalist.com, click Become a Client, learn more about how it works and how we can help you.